Welcome to the Drill Down Earnings. We've got the latest earnings from Paycom. This is the business story behind a stock on the move. That stock is Paycom. And yeah, I'm Futurum Group's chief market strategist, Cory Johnson. Why Paycom? Hey, it's the biggest tech company in Oklahoma. S&P 500 company that we want to pay attention to. We love me some Oklahoma, unless you count Devon Energy. And I love me some Devon Energy, but we're not counting Devon Energy as a tech company. We are counting Paycom because it's a fascinating software company, human capital management software. They reported earnings. We're going to call this a beat here, kind of. It's a beat. Wall Street not too excited about these earnings in terms of the price changing a lot here. But the business underneath this is kind of interesting for what it is. And the actual numbers, the business underneath the numbers, are not just the stock numbers for the year. Let's look at the year. It is year-end numbers we're looking at here. And I want you to get a sense of this business. It's a $1.7 billion business. Revenues were up 23% year over year. A lot of hardcore tech companies in Silicon Valley would kill for 23% year-over-year revenue growth, and profitable growth too. Profits, I should say, of $341 million in the quarter. It's 20% profit margins. Just fantastic news for this company. And for the full year, adjusted EBITDA of $719 million. When you strip out a lot of stuff, 42% operating profits. This is a really profitable business, growing at a really fast clip that maybe not a lot of technology investors are focused on, but the company's going great guns. As I mentioned, year-over-year growth. In the quarter, they just reported 17% revenue growth. Pretty good, even though profit growth was nowhere near that. Net income in the quarter up 82% on a GAAP basis. But let's look deeper beyond the headlines. And an important thing for this company, human capital management, fundamentally that's payroll and how companies are managing the people and paying those people that they're managing. And their client count was up 1%. So if you're getting 20% revenue growth in a year, to have clients grow only 1%, you're doing things right. Parent company basis, the client count up to 19,481 customers, up 2%. So again, client growth kind of slow, revenue growth really great. How did the stock react? The stock's not doing much. Down a little bit when they look at these numbers. And indeed, when you look at the year, the stock was actually for the year down 40% for the year. But when you look at the CEO, Chad Richison, what he had to say in the conference call, he's talking about how they've tended to focus, as his company long has, focus on big businesses, focus on businesses that are adding heads, and adding more bodies means more revenue for Paycom, even when the customer count doesn't grow a lot. And they talk about that Fortune 500 and above level that they've had great success with. Here's Chad Richison.
We've had a lot of success with sales effectiveness. Obviously, we're selling a differentiated solution that brings differentiated value. We did mention on the call that we've had more success, in the 500 and above. I think we called out 11% growth in that group, 18% growth in the group that has 2,000 or more. And so, we have been pressured more at the lower end of our market. And also, there's a resource aspect as we look to onboard clients and what we're going through there, of how we use our resources to best impact client value. And so, we're having a lot of success there in the mid-market. Oftentimes you are trading off on a unit basis, oftentimes small units for a little bit larger type units. And I'm talking about employee size.
So are they about to focus on the mid-market, the smaller market companies? If they are, that could be bad news for competitors like Paychex up in Rochester, New York, that lovely town of Rochester, New York. But maybe more importantly, Paycor, Cincinnati-based company that's been focusing where ADP and Paycom has not been in the past. Might not be good news for them in the future if that's where Paycom's looking. All right, what does it all mean? The big drill down earnings takeaway, and what's one number that tells us a whole lot? The drill down earnings bite. We'll have both those things right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
Okay, here's your quick drill down earnings takeaway for the just reported quarter from Paycom. Paycom numbers pretty good, really strong top line growth, very profitable business. Stock market didn't like it a lot right after the close here, but I'm going to call this a pretty good quarter for this company. And one big takeaway, they know that their bread and butter has been big Fortune 500 companies and bigger companies beyond. But as they start to look to smaller businesses, there was more emphasis in the sales call about their best salespeople. That could be interesting news for them, right? The drill down bite, the one number that tells us a whole lot. Annual revenue retention rate of 90%. So they kept 90% of the customers they started the year with, down a little bit from the 91% from the prior year, but still pretty good. All right, you're listening to Drill Down Earnings. I'm Cory Johnson. Our quick earning takes on Instagram and TikTok at Drill Down Pod. You follow our more robust earnings takeaways on YouTube. Follow me on X at Cory TV. Follow, like, subscribe, comment. We want to hear from you. The Drill Down Earnings, production of 6.5 Media.